Think Ethereum is past its prime? You might want to think again. Behind the headlines and beyond the daily price chatter, something remarkable is unfolding in the world of crypto and global finance. The world's biggest investment funds, spanning Wall Street powerhouses to dynamic players in Asia, are quietly and methodically accumulating Ethereum, treating it as the next digital gold. This isn't just a passing trend or speculative mania. It's a calculated move rooted in deep conviction, on-chain evidence, and a vision of Ethereum as much more than just another cryptocurrency. So why are these institutional giants choosing ETH over Bitcoin? What do they see that the mainstream has missed? And what could that mean for the future of your portfolio? If you've ever wondered whether you're missing out on a silent wave of wealth, this story might just change how you see Ethereum and where you stand in the next era of digital assets. Welcome to FinWise Now, your trusted source for global finance, crypto, and investing insights. In the next few minutes, we'll break down why the world's most influential financial institutions are quietly accumulating Ethereum behind the scenes, what on-chain data and the movements of smart money are revealing about the future of ETH, and, most importantly, what you should be doing in the next 12 months to position yourself for what could be one of the most significant shifts in modern investing. Let's start with the problem, and the insight that could redefine your perspective. While mainstream media continues to obsess over Bitcoin's every move, and social media is awash with talk of meme coins and fleeting trends, Ethereum is quietly powering ahead with substance, utility, and growing adoption. Consider the facts. Over 70% of all Web3 applications are built on Ethereum. This isn't just a number. It's a testament to Ethereum's enduring relevance as the foundational layer for decentralized finance, gaming, digital art, and next-generation social platforms. Nearly 60% of all stablecoin flows, those digital dollars that grease the wheels of crypto trading and cross-border commerce, also happen on its network. And let's not forget DeFi, NFTs, and DAOs, all of which rely on ETH as a core collateral asset, making Ethereum the beating heart of an ever-expanding digital ecosystem. But here's where things get interesting. Despite all this real-world utility, ETH remains down over 30% from its all-time high, even as activity and adoption accelerate. This disconnect between price and progress has not gone unnoticed by the smart money. In 2025, whale wallets, those holding tens of thousands of ETH, have been accumulating at a pace not seen in years. Wallets with over 10,000 ETH have steadily increased quarter after quarter, signaling that large players are positioning themselves for what they believe is a coming inflection point. While retail investors fret over short-term volatility, these whales are quietly building their positions, undeterred by day-to-day fluctuations. To truly understand what's happening beneath the surface, let's dive into the data. On-chain analytics. Those transparent records written directly into the blockchain never lie. In 2025, the amount of ETH locked in staking has soared to all-time highs. This isn't just a technical metric. It's a vote of confidence from thousands of participants who are choosing to lock up their ETH for the promise of future rewards, reducing overall supply and increasing scarcity. At the same time, ETH balances on exchanges have been dropping steadily. When users withdraw ETH from centralized exchanges, it usually means they intend to hold for the long term or participate in staking and DeFi. Further evidence that conviction is rising, not falling. But perhaps the most compelling evidence comes from the world of institutional investing. In the past year, some of the world's biggest asset managers have taken decisive steps into the Ethereum ecosystem. BlackRock and Franklin Templeton, titans of global finance, have launched tokenized funds on Ethereum, leveraging its smart contract capabilities to transform traditional assets, like bonds, real estate, and equities, into digital tokens. This isn't just an experiment. It's a strategic move to unlock new liquidity, enable fractional ownership, and streamline global capital flows. The U.S. Securities and Exchange Commission, once a skeptical observer, has adopted a more accommodating stance toward tokenized securities, providing a structured framework that legitimizes Ethereum as a trusted platform for institutional-grade assets. The tipping point came with the approval of US-listed spot Ether ETFs, bridging the gap between traditional investors and the world of Ethereum. By mid-2025, these ETFs managed over $15.7 billion in assets, making it easier than ever for pension funds, endowments, and everyday investors to gain exposure to Ethereum without the complexities of custody or private keys. This tidal wave of capital is not just a bet on price appreciation. It's a signal that institutions see Ethereum as the infrastructure for the next era of digital finance. Meanwhile, venture capital heavyweights like A16Z and Paradigm are doubling down on Ethereum's Layer 2 networks and decentralized applications. These investments aren't just about chasing the next hot project, they're about building the future of the internet itself. From scalable payment rails to decentralized social media, from on-chain identity to programmable money, the Ethereum ecosystem is where innovation is happening at breakneck speed. So what makes Ethereum a strategic asset, rather than just another speculative coin? Unlike Bitcoin, which is often described as digital gold, a store of value with limited functionality, Ethereum is the infrastructure for all of Web3. It's not just money you can hold, it's money you can use. You can stake it, lend it, borrow against it, use it as collateral for NFTs or DAOs, and program it to execute complex financial agreements automatically. This versatility transforms ETH from a passive asset into an active participant in the new digital economy. And the story doesn't end there. The successful implementation of the Pectra upgrade in mid-2025 has dramatically improved Ethereum's scalability and slashed transaction costs. Previous barriers that kept institutions on the sidelines, like high gas fees and network congestion, are rapidly being dismantled. Ethereum is now more suitable than ever for large-scale operations, attracting institutional investors seeking efficient, secure, and cost-effective blockchain solutions. So why should you care? The answer is simple. ETH might not be the flashiest coin anymore, but it checks all the boxes that matter for long-term value. It has the trust of the world's top developers, who continue to build and innovate at scale. It processes real user transaction volume, not just speculative trading, and it boasts an ecosystem that evolves and adapts to new demands, from DeFi and NFTs to tokenized real-world assets and beyond. As the next crypto bull run approaches, Ethereum is poised to become the backbone of a new Web3 economy, one where traditional finance and decentralized innovation converge. It's no longer just about price speculation. It's about building the pipes, the platforms, and the protocols that will power everything from global payments to digital collectibles, from decentralized governance to automated financial contracts. Crypto is volatile, and the road ahead will have its share of bumps. But one thing remains constant. Smart money always moves before the crowd. If the institutions that shape global markets are loading up on ETH, perhaps they know something the mainstream doesn't. Maybe they see the writing on the wall, a future where Ethereum underpins a $1 trillion tokenized asset market, where smart contracts automate the world's financial infrastructure, and where the line between traditional and decentralized finance disappears. So what should you do in the next 12 months? First, research the Ethereum ecosystem deeply. Don't just look at the price. Study the projects, the developers, the upgrades, and the real-world adoption. Track on-chain movements and pay attention to what the whales and institutions are doing, not just what they're saying. And most importantly, build a long-term strategy. Resist the urge for FOMO buys and knee-jerk reactions. Instead, focus on accumulating knowledge, conviction, and a position that aligns with your risk tolerance and financial goals. Remember, in every market cycle, fortunes are made not by chasing hype, but by understanding where value is being quietly built, often before the world catches on. Ethereum's story in 2025 is one of silent accumulation, strategic positioning, and the gradual emergence of a new financial paradigm. The question is, will you be a spectator, or will you be a participant? If this discussion gave you value, please take a moment to like, subscribe, and share it with others who care about the future of finance and investing. And let us know in the comments, do you think ETH could one day flip Bitcoin as the world's dominant digital asset? We want to hear your thoughts, your insights, and your questions. Don't forget to turn on notifications so you never miss the latest from FinWise Now, your trusted guide through the rapidly evolving landscape of global finance, crypto, and investment strategy. The silent wealth wave is building. Don't let it pass you by.